One of the most important skill in trading is understanding how to do analysis properly. Now, you can learn so many types of analysis in the markets, but one of the most important analysis is called top-down analysis. And this is what I do almost every day. Every time I do top-down analysis, it reduces my chances of losing the trade and increases the chances of a winning trade. And aside from doing a top-down analysis, in this video, what I'm going to show you is what I normally do as a routine. After doing the top-down analysis, I will expect price to play out exactly as I expect it, except if price does that, then I am not going to take the trade. This is an example. I'm waiting for price to trade into this area before I take the trade. And of course, I want to see the confirmation. That is the most important thing about trading. So this particular trade setup is on GBP USD. Right now, it's on the 15-minute time frame. And before that, I was able to send this particular trade setup with the elite traders community. You can see I was telling them for the meantime, this is where I am expecting GU to trade into. And of course, it's not something I do every day because these are my mentees. They see how I do analysis almost every day, 3 times a week. And I believe that most of them can do this at any time they come to their charts. And that's exactly what you get in the Elite Traders program. Is a complete mentorship that helps you to approach your market correctly. So let me show you what I did to reach this area. So first of all, I went to DXY. DXY is very important. And why am I going to DXY? DXY is the dollar index, the United States dollar index. And what that means is that this particular index is just like a measuring instrument that measures the strength of the United States dollar. There are so many factors that affect that. And why we do this is because we want to know exactly what is happening with the dollar. If you have other currencies that appear with the dollar, you know the 7 major currencies, they appeared with the dollar, and that is the benchmark asset for them. So whatever the dollar is doing, we expect to see it on the foreign currencies. And that is why if I am trading, especially Euro USD, GBP USD, Aussie USD, any of the major currencies that has the dollar, I must do the simple intermarket analysis, and I come to the dollar index and check it. So coming to the dollar index, I went to the weekly time frame. I don't mostly use the weekly time frame, but when it requires me to do it, especially when price is trading into a significant area on the weekly time frame, I don't hesitate to do that. I do it without hesitation. So look at what price is doing. What could you say is the active directional bias of price? Obviously, you can see price is trading bullish. That is what you should see. Price is trading bullish right here. Even though we saw a negative week, that is a bearish week last week, but that doesn't mean that the sell is going to automatically kick in. Trading into this particular fair value gap right here, responding to that fair value gap on the weekly. The weekly time frame may not give you so much, but then it will give you an idea of what price may most likely do from a long time perspective. So you could see that price is actually bullish even on the monthly. So what we need to do is to actually buy the dollar and sell the foreign currencies. That is what I did. Going down to the 4-hour time frame, that is the time frame forward for an intraday trader. After checking on the weekly and the monthly, straight to the 4-hour. I just did on the higher time frame, like the monthly or the weekly, to see what is happening currently. But sometimes I don't check it. I just go straight ahead and check the 4-hour time frame because that is a time frame for an intraday trader. All right. So look at this. What could you say is happening on this particular price action on DXY? So you have to know it. You have to know the major areas. Look at what is happening on the left-hand side of price and what is happening on the right-hand side of price. Left-hand side of price and the right-hand side of price. These are the two things you need to look out for. The left-hand side of price could be either an institutional reference point, a liquidity area, or price is trying to shift structure. Now look at this. The left-hand side of price Price started moving from here up to this area, trading into a fair value gap by your left hand side. But then that was not the only thing that happened. Let me show you something else. Price shifted structure. You can call it here. If you don't want to call it here, you can just call this one so that it will not confuse you. All right. Shifted structure at this point, market structure shift. You could see it literally at that point. Now, if you're looking at that area as a shifted market structure, what do you think price is about to do? Price is coming back into what? An important area for an energy that will give it momentum to trade bullish. All right. So this is what I'm seeing. If you look at this carefully, there is a fair value gap here, and these two are acting like liquidity area here. This guy is a liquidity area that price may most likely trade into, hitting this fair value gap before you have the bullish movement to continue from that area. So that is exactly what I'm seeing happening. I don't want to go bearish. Of course, if you want to do short time trade, just to take some few pips as price trade bearish before it finally trades bullish, you can take the sell for a moment, especially if you go to the lower time frame, 15 minutes, you're going to see how price started moving bearish, and then you can take the trade from there. So this is exactly what I'm expecting price to do. All right, I am expecting price to clear this liquidity. Even if price did not reach the consequent encroachment, all I need is for price to clear this liquidity and start going up. So I was watching this happening on DXY, and whatever is happening on DXY, I will do the exact opposite on foreign currencies, and that's exactly what I'm doing now. At worst, price will just trade into this gap. But now this is where confirmation is important, and I will show you when I go to the currencies. You don't just do it blindly, you wait for confirmations. I've taught this so many times. So as price is trading now, I don't want, of course you cannot jump into it from here. You don't want to jump into it and say I want to sell here and I want to come down here. It's a wrong trading approach. You always need to take the entry at the earliest moment. All right, at the earliest moment. Now, before we continue, guys, let me introduce you to FastBull.com. FastBull.com is an amazing platform. They have so many products for you. What is so important about it is that these products are free. You're not going to pay for anything to use the product. One of it is the FastBull chat platform. How do you access it? You just go to FastBull.com. The link is in the description of my video. Then come to where you see charts. You can see free forever. Click on it. And here is FastBull.com. You can see the chart, right? It's just like your normal trading view. You can see everything here is so interesting. You can see where you can select the currencies. And one amazing thing about this is that you can add as many currency pairs as you want. Let's go to Euro USD and add it up. Then have another currency, Aussie USD. Let me have it like this. Perfect. Now you can see them. You see 1, 2, 3. 3 of them. You can tile them and have them side by side like this. You see them. All of them are here. You can add indicator to each one of them. Come here, add whatever indicator you want to add. You see, just confirm. You're going to add it, add another indicator. All of them, you can add indicators for them. And aside from that, one aspect of it is the chart. If you come to the chart, this way people are actually sharing their ideas about what is happening globally in the financial markets. You can see it here. You can put them side by side as you take trades, as you analyze on the FastBull.com. You want to check FastBull, use the link in the description of this video. Coming back to our analysis, you can see price is now here. If you were to take the trade here, it's wrong. And what I'm expecting is for price to give me a confirmation, something like, clearing liquidity. Let me have it this way. Price having to clear liquidity below here, having a shifting structure, and then the bullish movement will go on. It can continue as much as here. Don't get me wrong. As price is trading, it can come even up to this area. This is why you need the confirmation. Shifting market structure is as important as anything. Price can trade here. It can shift structure from here. So whatever you want to do, make sure you wait for the shifting structure. And this is why if I go to GBP USD, I will comfortably do my analysis now. So this is the reason why I am seeing this as a bearish market, starting from the higher time frame to the weekly time frame. Look at it very carefully and take a look at what it has for us. It's almost the same thing with what is happening on DXY. That's the beauty of it, and the exact opposite. All right. Now coming to the weekly time frame, you can see price is actually bearish. Price is bearish at this current moment. Price reacted from this proportion block, but we are still bearish because we just traded into this particular guy. Can you see a fair value gap and what? A bearish breaker. I know some of you did not see that. Price just traded into this proportion block, but as it is about to go back up, it is reacting from this area. So we're going to see how price is going to react. Since we were bearish from the beginning, it is not going to be as fast as possible for price to start going back up. Of course, you know it. So that is why we need to follow what price is doing gradually. And if I go to the 4-hour time frame, now I'll come to the normal time frame that we do analysis as intraday traders. So if you look at this, now look at this. What do you think is happening? Price had this movement from here to here. All right. You can see it from here to here, premium and discount. And price, of course, traded into this fair value gap, the first push. But look at the trap price is creating for a lot of people. Another fair value gap down here. This is the only reason why you should look at it from this particular perspective. If price is going to trade into this fair value gap, then what do you think is going to happen? Here. And how is that going to happen? It's going to start from the 15-minute time frame. That is exactly the time frame I want you to look out for. If you go to the 15-minute time frame after looking at what price is expected to do on the 4-hour time frame, now look at the 15-minute time frame. Now you can do a proper market structure delineation. That is exactly what I will do with you here. So look at this. If you look at price coming, boom, shifting market structure, right? Boom, break off structure, right? Is that what you're seeing? So the 15-minute time frame for an intraday trader is the time frame you do what? Market structure delineation. This is the market structure shift, MSS. And this is a BOS. So price did what? I know some of you were taking this as a sell. All right. Some of you have taken this as a sell. Those of you who don't wait for confirmation. A sell here simply means you are screwed now. Right? You are stopped out, of course. Definitely you are stopped out. All right. So this is how I'm seeing this. A liquidity resting here. If you had checking the higher time frame, you would have seen what is happening. That is the beauty of top-down analysis. So this is liquidity. In case you entered and you got stopped out, don't worry, it's another opportunity. The reason why I was looking at this fair value gap is because there is obviously no reason for price to trade here except this bearish order block. And then, of course, you should know that the PD-ARRAY must be respected. Price is at a premium area, trading above this liquidity area. This is why I sent that trade setup here. And I didn't just tell them to wait for confirmation. I said, always wait for MSS confirmation before entry. This is one of the things I teach in my mentorship. Entry confirmation. Now we are finally at the area I was expecting price to come to. And yes, this is the area. Stop loss above here is big to somebody. And TP is here. I think it's significantly considerable. So if I'm targeting this drawn liquidity as my target, and if you observed carefully, you'll realize that just below here is the 4-hour time frame what? Fair value gap. That I was telling you price may most likely trade into before it finally goes up. You see? So if you're doing your top-down analysis, you need to know where price is at currently and how price is going to trade into the area you are expecting it to go to. So now, what exactly is the confirmation? Even if price just touched this, it's too risky for you to jump into it. You can even minimize the risks you have when you wait for the confirmation. Now, from the 15-minute time frame, you go to the 5-minute time frame and carefully wait for a market structure shift. And that is exactly what is cooking here. Price is trying to cook that shifting structure. Now, as I wait for price, it reduces my risks. If I see price does something like this, it means I have a shifting structure, and then I will take the trade from the shifting structure. If I don't see the shifting structure, it means price is going to definitely screw you up. You don't just enter blindly. You wait for price to shift structure. If you don't see shifting structure, what would you do? You wait for it. If it doesn't happen, look for another setup. That is the confirmation I was telling you. All right. So as it is now, it's not yet ready. We want to see a shifting structure. It may not necessarily trade into this consequent encroachment of this fair value gap, but then if you have the shifting structure, you may most likely take it, and then it will minimize the risks of you getting stopped out as you take the trade after the shifting market structure. So as it is now, price is just trying to finally give you the final entry. Some people use the 1 minute, but I don't trust the 1 minute, especially when it comes to having a serious setup. So even on the 1 minute time frame, you don't have that confirmation. So you could see how difficult it is. If you don't wait for the shifting structure, you're going to have trouble. As it is now, it's a bullish market. Definitely, you see prices doing, break of structure, break of structure, break of structure. You don't want to go against a moving trend. That's why there is a popular saying that the trend is your friend. So as price moves here, it continues, you let it be. But if you shift structure, you take the sell. All right. But on the 5 minutes. So this is about this top-down analysis, guys. I hope this video helps somebody. You want to make sure you do the right thing every time you're trading, and I'm waiting for the setup to finally be ready, and I will take it. Thank you very much, guys, for watching. Make sure you give me a like, subscribe to this channel. If you have any question, let me know in the comments. See you in the next video.